Hey, folks, my guest today is Matt Elson. He is the CEO of Evotix, which is transforming how companies manage health, safety, and risk and engage with their employees, delivering safe, nurturing, and compliant workplaces. Matt, you ready to take us to the top?
I am. Yep.
Okay, so first off, how do you get into this space? Do you have a horror story or something that you want to share?
Well, it was really, I suppose, more by chance. I'd been an interim chief exec, and we sold the business that I was running, and the partners in the fund said, "What next?" I said, "Well, I've always been on the lookout for a business to buy without super actively searching." And they said, "Well, take a look at, as it was at the time, She Software." And so I bought it for the proverbial dollar because it was very much a turnaround. So I came to it without any background in EHS. But of course, over time, have absolutely become sort of embedded in the business, and we're very much a purpose-led business. So, how can it be acceptable that in European and North American workplaces we're still killing 5,000 people a year? And it's mostly from causes which are well understood and easily preventable. And we're exporting most of that risk to the least advantaged in society, the kind of gig economy employees, people who are on insecure contracts. So, we're very much purpose-led, driving that revolution, improvement in workplace safety.
And so, sorry, just to be clear, if there's someone listening right now running a 200-person company, how would they use you inside their own company? Would they be serving out surveys to get sent employee sentiment sort of stuff? Is that what this is?
So if you're responsible for health and safety, there's a bunch of stuff you need to do. You need to record and investigate your incidents, follow through the actions, you understand your risks, put the mitigations in place, make sure your people are trained, etc. Lots of companies in our target space still doing that with pen and paper and Excel spreadsheets, obviously very inefficient. You can't learn anything from your data. You can't demonstrate your compliance. But for us, the key to it is about employee engagement. So we're about embedding safety in the day-to-day activity and the day-to-day thinking of the employees. So we're mobile first. We're very, very focused on having a very strong kind of UI, easy to use, very intuitive, and getting employees engaged in that safety activity as part of their day-to-day.
I see. Okay, so how many companies do you have paying for your platform today?
We're kind of between 400 and 500.
Okay, got it. Well, okay, that's a lot. And so, how many? When you look at all the employees they have assigned to the company, how many total employees are on the platform?
North of 2 million.
Oh, wow. Okay, interesting. So the average size there, what? It's 2 million divided by 450 is what? Like a four? Wait, that's huge. 4,000 people on the team on average.
Yeah, so our kind of sweet spot, we're working with typically businesses, maybe 500 up to 10,000 employees,
Okay.
sometimes larger if they're kind of their operations are very kind of coherent and similar. So, for example, Network Rail, big UK business, 100,000 employees, so that all of their employees will be using our platform.
Well, that'll pull your average up, obviously. So that makes sense. Tell me more about the backstory here, Matt. When did you launch the company?
Well, I bought the business back in 2011 as a
Oh,
sales.
this was She Software. You rebranded it.
It was She Software. I rebranded it exactly. So we
Oh,
we rebranded. We rebranded last October.
I see. Got it. Got it. Okay, got it. Because I remember the She Software story, but I
Right.
didn't realize this was the same thing. So you put a
Yes.
dollar in. That's amazing. Okay, so you put a dollar in, you buy the thing, you rebranded it. So when was She Software launched?
She Software originally 1995. So it had been through several ownerships when I acquired it.
Oh, what's going on there, YouTube? Good to see you guys. Now imagine this. You love watching these interviews with SaaS founders, but imagine if we took all of the valuation data out from over 2,807 interviews I've done manually. Saves you a lot of time. Well, we've done this. We've built it into the beautiful interface inside of FounderPath. Check this out. I'll show you how you can access this in a second, but you log in, you connect your Stripe account, you see your valuation real time, you can see what it changed over the past 88 days, and even set goals for valuation this year. Now, the secret to valuation is there's many different ways to value a SaaS business. So the reason you're going to see 3 or 4 different valuations inside of your FounderPath dashboard, this is all free by the way, is because depending on who's doing the buying of your SaaS company, you're going to get a different valuation. A VC is going to pay a different valuation. Private equity firm is different. If you're going to do a minority sale, that's different. And if you sell the whole business, that's a different valuation. You can see all those when I hover over here. Right. So the teal is what a VC would pay. Yellow is what private equity. And red is if you sold the whole thing outright. Now, what's cool about this is not built off random data. Again, you guys hear these interviews on YouTube. All these data are built from real-time valuation data points founders share with us on the show. So traction, 1.2 million, seed round, 3.7 raise. They sold 22% of their business. Go in here and filter by the event. Maybe you only want to see companies that have sold the whole business. Well, here are a bunch that have been acquired, the valuation and the multiple. Maybe you're going out right now and you're raising your seed round. Well, go in here and look at all this recent seed deals that went down, what they raised, what valuation they raised at, and what percent that they sold. There's never been a larger data set of SaaS valuations than what you can get now inside of FounderPath, and we're thrilled to bring it to you. All right, we're going to go back to the YouTube video here in a second, but if you want to check this tool out, if you want to jump in and sign up, you can check it out for free to get your valuation at this link, founderpath.com/products/valuations. Or if you go to founderpath.com and hover over products, click on get your valuation here and go ahead and sign up to give it a whirl. Again, all that valuation data live right inside the platform. I hope to see you there. All right, let's jump back into the interview. Wow. Okay. 1995. Okay. And people always say, like, when I tweet out, go buy a company for under $1,000, people go, Nathan, that's not possible. But you've also done it. All right, I bought a Chrome extension for $1,000 and it did well. You bought this for $1, the proverbial dollar. How'd you negotiate that deal? Did She Software have any revenue?
Yeah, well, it already had 200 customers. The problem was that it was in commercial dispute with its largest customer, which was the revenues. And so the fund was near end of life. They needed to be rid of the company, and nobody else wanted to take on that risk.
Well, I love this, guys. So if you're listening, you should reverse engineer a playbook, right? So go look for portfolio companies inside of funds that are near end of life. Matt, how can people find funds that are near end of life?
Well, I'm not sure that I'm expert in that. I guess you need to network around the industry. This particular fund was a secondary fund. So what they'd done is they bought a whole stack of assets from a distressed purchase, and they were trying to work through them and figure out what they were doing with them.
Can you name who it was so we can find other examples?
Well, the fund was a Collar Capital fund, and it was managed by Nova.
Collar Capital managed by Nova.
Yep.
Sorry, how do you spell collar? How do you spell collar?
COLLAR.
Collar Capital managed by Nova?
Yeah, but again, this is back in 2011, so who knows?
Well, it's still okay. I think the lesson is still valuable, right? I mean, you could do this with VC funds today on 5-year or 10-year lives. Go look at their early investments that still might be chugging along, but aren't breakout successes. There's potential win there. So you buy this for $1. You're now growing it. Now, what are customers paying on average for the tool today?
Pretty average ARR, $25,000 or so.
Okay, that's what each one's paying per year.
Yep.
Okay, wow. And is that average annual contract value much higher than when you bought it? Have you expanded ARPU?
For sure. I mean, when I bought it, the average was maybe $2,000.
And what year was that again? Sorry.
2011.
2011 you bought it, and it was $20,000. $2,000.
$2,000 ARPU, 200 customers. Yeah.
Wow. Okay. Yeah. So that's a massive expansion. Or is it the same customers who are paying 200 now paying 25,000 sort of per year, or you had to replace them?
Well, a few. I mean, we've worked through the customer. I mean, there were some uneconomic customers clearly when I acquired the business, and so we very much focused on the customers that we thought could kind of draw true value from the solution and priced accordingly.
Mm-hmm. So just to be clear, when you bought it, there were 200 customers paying $200 per year.
200 paying $2,000 a year.
Oh, 2,000 per year. Okay. Yeah. So I mean, you bought this bad boy then with. I mean, this isn't small revenue. I mean, I think was doing $400,000 a year, right?
Yeah,
but
for sure.
because you handled the risk and everything, you're able to get it, financially. Maybe emotionally, it was a big toll, but
we were being sued for $11 million by our largest customer.
Okay, so how did you settle that, or did that suit go out with you being the new owner?
Well, we sued them, and then it went to a mediation, and we faced them down across the table, and they paid us $300,000, which kept the business afloat.
That's like a seed round.
Yeah, exactly.
But no equity.
Correct.
I love this story. Okay, this is amazing. Got it. So you sued for 11 million. Now this was your biggest customer that just weren't paying or something?
Well, they had taken our solution and then developed their own software, arguably taking the IP and certainly breaking the contract.
Oh, I see. So you want a $300,000 settlement, which you could then reinvest in the business, do whatever you wanted to do with.
Right.
Now you've got 450 customers paying on average $25,000 per year, right?
Yep.
So, I mean, can we do the math on that? 450 customers paying $25,000 per year. I mean, it's like $11 million business.
Yeah, a bit north of that.
Wow, that's impressive. That's super impressive. Where did you learn how to do this? Did you have a software company before this?
No, honestly, I was completely fresh to software. I've had a varied background, I suppose. I've done consulting. I've been in various executive roles, and I back myself to know how to kind of manage a team, grow a business, and taken a lot of external advice. Kind of studied, read a lot, listened a lot, and taking it from there.
Guys, don't you get jazzed up listening to founders like Matt? I just love this story. Unconventional, very scrappy, a lot of growth. This is great. You're bigger than many of your VC-backed competitors. Now, have you raised external capital outside of your own?
Oh no, for sure. Yeah, we've done A round and B round now, so we've got about 10 million of external capital.
Okay, well, you're a little less sexy than in my eyes, but you're still pretty sexy.
I know you like the Bootstrap. Yeah.
You've listened to a couple episodes, huh? You know the drill.
Yeah, but we're at least we're more than a 1-for-1 kind of funds raised to ARR achieved.
He knows my next question before I even ask it. That's impressive. That's impressive. Yeah, so you've raised 10, but you're at 12 million ARR, which I love. Very capital efficient.
We're more than 12 million. Actually.
Oh, more than 12. Yeah, that's amazing. Okay, break down the rounds for me. When was the A and the B?
So A was 2018, B was 2020. We're still living off that capital. We've got decent runway. We're still burning a little, but we're moving pretty rapidly towards break even.
So how much was that Series B?
Series B was 5
million. Okay, and sorry, how much was it? And the Series A was also 5?
Well, Series A was 2 stages, so it was 3 and then 3 again.
Okay, got it. And that second 3 closed in 2018.
The first 3 closed 2018, second 3 closed 2019, and then the B round 2020.
Very interesting. Now, looking back at those rounds, did you do those again? Did you really need that money? Was the equity dilution worth it?
It was, yes, because we are the lead player in EMEA, or is in the UK and Ireland, and at some point, we were going to be constrained in our growth, and so the round was very much to enter the North American market, and for a small European company going into North America, right, you don't do that lightly. So I understood that was going to need a significant investment, and we needed the capital. But the other thing is that, as I said, we're always interested to kind of take the best advice and best external resources. And our investors have been fantastic in terms of their ability to, they've been there, seen that, done it. And so the advice that I get at the board and from the operating partners is fantastic.
Well, give them some love. Who are they?
Yeah. So A round, Mercia, B round, Frog Capital.
Broad Capital?
Frog, Frog, Frog.
Frog Capital. Okay, interesting.
Yeah.
And I guess let's go back to the A real quick. Most folks are selling, obviously, 10 to 15% in their A. Were you sort of in that same range?
Yeah, I think a little bit higher than that.
Okay, so you would have been like a 50 million valuation, 45, 50 million valuation, something like that.
Well, at the time, lower. No, at the time, there's a lower valuation. Yeah. Because, we've been growing fast. So the valuation, I think on the A might have been 12 million, and maybe we're now sort of north of 100 million.
Well, sorry, just to be clear, when you did the Series A and you raised 6 million there, 3 million twice, right?
Well, 3 and 3, right? But not all at the same valuation.
Oh, so the second 3 was at a higher than a 12 million valuation.
Yeah, exactly.
I see. Yeah, that second 3 hopefully was at like 25, 30 million or something, right?
Yeah, exactly. So, I think you're possibly your next question, I don't know, but I'm still the largest shareholder, but slightly below majority.
I love that. No, I love that. And just to be clear, so that Series B, you guys were at north of 100 million. It was priced, or do you think now with your growth, you're more than 100?
Now we're north of 100. Yeah. I mean, subject, of course, to where we are in the markets at the moment.
Of course. So Series B was like 50, 60 million, something like that.
Yeah. Something like that. Yeah.
Right around there. Fair enough. Very cool. Okay. I love this story. And again, just to be clear, so you still own individually the most, but a little less than 50%, which is great. So you're doing this in a very capital efficient way. This growth, those stories are incredible. How are you? How are you growing so fast? How did you double your customer count? Where are you finding customers?
So we're direct sales. So we have the kind of classic marketing function, and then we have a BDR function where we're sort of developing those opportunities to the point where they're ready to be passed across to our BDM team.
Mm-hmm. And how many folks today full time are on the whole team?
Across sales and marketing, probably about 50.
Okay. Okay. And how many on that sales team carry a quota?
So if you're talking new business quotas, we'd have 11 quota carriers.
What about current, like expansion targets on current
Yeah, so
customers?
then we got an expansion. We got an expansion team of currently 3.
And so you give them like a $1 million book of business. They have to drive it to 130% expansion or something.
Yeah. So what we found was we previously had just had a customer success function, and what we found was that we were picking up the smaller upsells, but we weren't driving the big expansion deals. And so I've got a team now who are more hunters, who are where we're in the corner of a larger corporate. They're proving very successful at working out to other divisions or other geographies.
Okay, so they're really their goal is, hey, go hunt down opportunities for expansion, not where you're increasing it by 10%, but where you're doubling the contract value by selling into a new division.
Exactly.
Guys, that's a big takeaway, right? So if you have CS reps, don't challenge them, make them go double ACV. Don't give them 120% NDR target. Go make them double that ACV on a couple customers. So nice tactic there. And then go back macro 10,000 feet, the whole team all together, everyone at Evotix.
Yeah, so we're at about 150.
150. Okay. You're getting up there, man. Do you miss being down in the weeds in the product? Do you have all the people problems now?
Yeah, there is some of that for sure. There is as you go from 50 to 150, it starts to change, and it's hard to know everybody individually. But I think over time we built a super strong culture. Town halls every 2 weeks. I travel a lot. I meet the folk, and so I think it's very important to maintain that very strong kind of culture that you build up while you're a startup, and it obviously adapted over time. But that kind of glue is very much what drives the business.
And real quick breakdown: how long is the town hall? Every 2 weeks?
So that's just a half hour.
Half hour.
And so I'll give some quick updates, and then I'll invite people around the business to whatever's a topical issue.
So break down that 30-minute agenda for me. A quick update might sound like what?
Okay, so maybe there's 5 minutes where the customer success team talks about some recent successes. I'll talk about new joiners, birthdays, anniversaries, and generally celebrate success. So we use a system called 15-5 where we call out high fives, and so normally there's some great high fives that reinforce our values, which I can call out in that meeting.
If people want to learn about 15-5, what can they do about that? Is that performance management, literally 15-5.com?
Yeah, 15-5.com. So it's like sort of an employee engagement and sort of temperature check. So every employee does a weekly check-in. And then from that weekly check-in, their manager or they have a one-to-one with their manager, and that sort of helps to set the agenda. And so particularly with remote working, it's important to maintain those connections with your employees.
Yep. No, totally agree. Very cool. Love this story here. Let's just real quick on growth. You're at 1.2 million-ish right now in monthly revenue. Where were you exactly a year ago?
We've grown 43% in the last 12 months.
Wow. Okay. So you were like 800,000 a month a year ago. Do you remember the year the business broke $1 million in revenue?
Probably 2014, I would think, something like that.
Okay. So basically 2011 was when you bought it, right?
Yeah.
And so it took you 3 years to take it from 400K up to the first million. Yeah. Okay. Interesting. Guys, there's a lot of good data in here. Matt, let's wrap up here with the famous 5. Number 1, favorite business book.
So I like The Hard Thing About Hard Things.
Number 2, is there a CEO you're following or studying?
Well, actually, I'm going to switch that question. At the moment, I'm following Sequoia Capital because I just think they provide some really great presentations on particularly in the current environment. How do you think about running your business?
I agree. Number three, what's your favorite online tool for building the business?
15.5, I think I'd probably call out. That's been very, very powerful for us.
And real quick, I'm adding this question in. What's something that you're curious about right now in terms of growing the business, the SaaS business? What are you thinking about?
Um, I'm mostly thinking about how do we get that kind of the right focus and getting product and engineering working together on kind of powerful linking through from market through commercial through product through engineering and getting absolute coherence and focus on that.
Interesting. Number four, how many hours of sleep do you get every night?
8.
Okay. And Matt, situation, married, single, kids?
So I have a partner and one child.
One kiddo. And how old are you?
I'm 56.
56. Last question. Something you wish you knew when you were 20.
Um, I guess things come with time. You don't need to be in too much of a hurry. You just need to be persistent and confident in your abilities, and things will come to you.
Guys, She Software was doing $400,000 in revenue back in 2011 when one of their biggest customers went and built their own product. He said, you know what, I'll take this company over as we go sue them. There's a lot of liability, bought it for $1 in 2011, ultimately won that suit, got a $300,000 kickback on that legally. And then in 2014, the business broke $1 million in revenue. But what happened since then is incredible. They're now over $12 million in terms of their run rate. They believe that creating a safe work environment is important. They've built software to help you do that at evotix.com. Now, again, doing $1.2 million a month in revenue, up from 800 grand just a year ago. They raised about $11 million, which I love. That's less than their ARR. So very capital efficient as Matt looks to continue to grow with his team of 150 folks. Matt, thanks for taking us to the top.
Great. Thanks, Nathan.
One more thing before you go. We have a brand new show every Thursday at 1 p.m. Central. It's called Shark Tank for SaaS. We call it Deal or Bust. One founder comes on, 3 hungry buyers. They try and do a deal live, and the founder shares back-end dashboards, their expenses, their revenue, ARPU, CAC, LTV, you name it, they share it. And the buyers try and make a deal live. It is fun to watch every Thursday, 1 p.m. Central. Additionally, remember, these recorded founder interviews go live. We release them here on YouTube every day at 2 p.m. Central. To make sure you don't miss any of that, make sure you click the subscribe button below here on YouTube, the big red button, and then click the little bell notification to make sure you get notifications when we do go live. I wouldn't want you to miss breaking news in the SaaS world, whether it's an acquisition, a big fundraise, a big sale, a big profitability statement, or something else. I don't want you to miss it. Additionally, if you want to take this conversation deeper and further, we have by far the largest private Slack community for B2B SaaS founders. You want to get in there. We've probably talked about your tool if you're running a company or your firm if you're investing. You can go in there and quickly search and see what people are saying. Sign up for that at nathanlatka.com/Slack. In the meantime, I'm hanging out with you here on YouTube. I'll be in the comments for the next 30 minutes. Feel free to let me know what you thought about this episode. And if you enjoyed it, click the thumbs up. We get a lot of haters that are mad at how aggressive I am on these shows, but I do it so that we can all learn. We have to counter those people. We got to push them away. Click the thumbs up below to counter them and know that I appreciate your guys' support. All right, I'll be in the comments. See ya.